Welcome everyone. Today we're exploring my 9 core DCA stock selections. And look, I'm not here to tell you how to day trade or time the market. Instead, I automate my wealth by dollar cost averaging into these exact 9 stocks every single day. Up or down, it doesn't really matter. The core strategy here is a barbell, so I pair hyperscalable digital monopolies with the physical constraints required to run them. So if the tech world explodes, I win on software. If it hits a physical wall, I win on raw infrastructure. So let's get straight into it. So here's how the machine's actually built. So I have divided these 9 stocks into 3 clear buckets. Bucket 1 is generative computing stack, the companies that own everything from the literal machines printing microchips down to the apps on your phone. Bucket 2 is the physical bottleneck, because everyone forgets that the cloud runs on physical power and metals. And bucket 3 is hypergrowth regional monopolies, the plays capturing massive user bases completely outside the standard Western competition. So if you own the rails for all three, you don't really care about what the day-to-day market noise is. So let's start with the foundation. We have ASML and NVDA. So think about it like this. I don't care which AI company wins the race because they all have to pay a toll of these two. ASML has the little 100% monopoly on the machines needed to print advanced silicon. So no ASML, no advanced chips. And NVIDIA, they aren't just a chip company anymore. Their CUDA software completely locks in developers. So once an AI company built this AI ecosystem on NVIDIA, switching to a competitor is so expensive it's basically impossible. They own the hardware gateway. Next up are the giants funding the entire operations, Microsoft, Google, and Meta. And you can add the other big companies in there as well, like Apple, Tesla, etc. So these guys have the biggest cash piles on the planet. They're aggressively buying up the hardware we just talked about. Microsoft and Google are turning up that computing power into corporate utilities, locking businesses into recurring cloud subscriptions through Azure and Google Cloud. Meta takes a different route through they apply AI straight to their 3 billion users to make their ad targeting insanely efficient to represent infinite balance sheets that feed our tech thesis. Now, if we pivot to the real world, because this is where most of the investors tend to not look, you can scale the digital economy without, you cannot scale the digital economy without physical copper. So AI data centers require a certain amount of it for power grids and heavy duty cooling systems. So look at BHP. For the first time ever, their corporate earnings officially flipped in iron ore business, making over 51 of their core profits. A world-class copper miner takes about 15 to 20 years to build from scratch. BHP already owns the best low-cost mines on Earth, so it's a pure scarcity play here. Along with copper, those massive server arrays need massive power, so 24/7 uninterrupted power. Solar and wind unfortunately can't do that alone when the weather shifts. Nuclear is the only clean baseload answer that scales mathematically, and the tech companies are already signing massive multi-year deals directly with nuclear stations. So that brings us to Cameco. They control the highest grade low-cost uranium mines in the Western Hemisphere. Plus, as the West aggressively cuts off Russian nuclear fuel, Cameco captures massive pricing power, and it's a pure strategic energy play. Now, moving away from the West, I want to talk about MercadoLibre. Their revenue is growing at a staggering 49% year over year. The market sometimes panic when they spend heavily on infrastructure, but the margin squeeze is an offensive weapon. They're pouring cash into their own first-party logistics hubs, making it practically impossible for Amazon or anyone else to compete with them locally. They aren't just an e-commerce site; they're also concurrently the Amazon, the PayPal, the digital bank for the entire underbanked population of Latin America. And to round out this portfolio, we have Futu. This is a pure digital wealth tech platform, meaning they have zero legacy brick and mortar overhead, allowing them to pull in elite net profit earnings over 50%. While the market gets spooked by regulatory shifts inside China, Futu smoothly executed an aggressive international expansion via their Mumu app, which I personally use, scaling rapidly across Singapore, Japan, Australia, and Canada. They generate an immense amount of free cash and they use it to actively buy back their own stock, setting a hard floor on the price. So at the end of the day, these 9 stocks aren't just random picks. They form a self-reinforcing macro engine by automating my buys every single, should be day. By automating my buys every day. So I buy a portion of these shares every day. Um, and I completely erase the emotional risk. I don't really look at these stocks. I know they're gonna do great. I know the underlying companies are great. So when the market dips, I don't panic. I just lower my cost basis on the highest conviction monopolies on earth. So if software takes off, my tech holdings fly. If hardware bottlenecks, my energy and commodities play rocket. And if it's a fortress built on multi-decade compounding. So appreciate everyone for watching. Let me know what your DC strategies are, what you guys are looking at in the comments. Is just what I have at the moment, that I'm hoping to execute for the long term. But yeah, I'm keen to hear your thoughts, and I'll see you guys next time.